It's time for Money Talks, presented by MidFirst Bank. Get your OU debit or credit card today exclusively from MidFirst Bank, a premier partner of OU Athletics. True to you, member FDIC.
We got Money Coach Cami here.
Hello.
Hey, Cami.
Hi.
What's up?
Oh, I'm great. How are you?
I can't complain. I could complain. It wouldn't do anybody any good.
Right.
No,
Right.
we're not
But I
here
could complain.
to talk about football right now. We are going to talk about credit.
Credit.
What a word. What a thing. What is credit?
Yeah, let's start there.
Yeah.
That's a good question. Credit is your ability to borrow money.
Before we get started, move your mic a little bit closer to you. There we go.
Credit is your ability to borrow money.
Do it again for real, though.
Okay.
Bring it closer.
Even closer.
There you go. Yep.
Okay.
Right there. See
There?
how, you know what I'm saying?
Okay.
Yeah.
Okay,
What is credit?
Credit's your ability to borrow money.
So,
Lenders look at your credit history, right, from your credit report, and they look at your credit score, which is calculated from your credit report, to decide whether or not they trust you and they can lend you money. But it's actually more than just lending money. A good credit score can help you get an apartment, get utilities in your name, even get a discount on insurance. And then if you're looking for certain jobs in the financial world, they'll pull your credit as part of the job application process. So it's not just your ability to
I
borrow
didn't
money.
know that on the jobs. Dang.
I mean, it's kind of a way that people can look at you and say, can I trust this individual financially? So,
We got to have a good track record.
yeah, my track record's pretty good, I think.
Yeah,
My credit score is good anyway.
Yeah. Well, my credit score is pretty good, but which one though? And Cami, you could probably talk about it because there's 3-4 different kinds of credit scores or something. Right?
I'm uneducated. I thought you just had credit.
Yeah. So there are multiple credit.
Yeah, this is why she's here.
Yeah, so there are multiple credit scores. The most popular or widely used credit score is the FICO credit score. So that
Right.
may be what you're familiar with.
Yes.
But lenders can also use other credit scores. I would say probably the second most popular is the Vantage score. Now, the Vantage score was created from the 3 credit bureaus, Experian, TransUnion, and Equifax, as a competitor to the FICO credit score. Do you know what the credit bureaus are, those 3 credit bureaus?
No, after we got past FICO credit score, we're in uncharted territory for me.
I know Caleb
uneducated.
knows because he's listened to me talk to the players
Enough
about
times.
credit. Yeah. So they are the 3 credit bureaus that keep track of your credit history, that credit report that I was just talking about. So they're taking all your history with lenders and creating this credit report. So you're identifying information's in it, your credit history. So if you opened up a credit card, that would be on it. If you had a car loan and you paid it off, that would be on it, even though you've paid it off, right? If you've been sent to collections, you've filed bankruptcy, all of that information's on there.
Okay, so the collections, does that have anything to do with your FICO?
So if you have been sent to collections, your FICO credit score will go down significantly. So the FICO credit score, it ranges between 300 and 850. I always tell students to think of it as a report card, right?
Yeah.
You're trying to get the A, and the A is probably about 720 or higher. That's what most lenders are looking for.
Right.
Caleb's got an A.
I got
Right.
an
A.
I'm like kind of confused though because like
You can help your FICO score by paying bills, by
for sure, but like I got sent to collections recently. I had a surgery and there was a brace, like my ACL brace, that I guess I was paying for. I thought insurance covered or whatever, but I was actually on the hook for it. And then like months later, I'm getting all these letters that I got sent to collections because I didn't pay like $60 for this brace. But my credit score never went down.
Okay.
And so what's the explanation?
Medical debt does not hurt your credit score as much as,
okay.
That's something that changed actually.
How recent is that?
I think it was 2025 that it changed. It could have been 2024, but
I got
yeah,
lucky.
it's recently.
Good time to have a surgery.
It still
Good
can
time
go.
to forget to pay off my brace.
It can still go on your credit report, but I think if it's a medical debt below 500, it won't go on your credit report. That's what the change
Okay.
said. So maybe it was before that change. And used to, medical debt would go on your credit report after 6 months, and now it's after a year. So
Okay.
I think maybe the timing of it may have the reason why you're getting that. But you can always work with that collections agency to pay
Yeah.
it off. And
They were
try to
actually
get-
super nice. Like they
Yeah.
called me and it was just like this little old lady. You have a $60 outstanding
Yeah.
balance. And I was like,
Yeah.
oh, I'm so sorry.
I can give you 20.
Yeah.
You got to negotiate with the
You
collections.
can negotiate.
Yeah.
You actually
Oh,
can.
what?
Yeah.
Yes. Yeah.
Because once they sell off, because it's technically somewhat illegal to sell off your debt to a collections agency without your consent. And so you can then go in and sure, there's still this debt you're supposed to pay, but you can say, well, if you tell them like, hey, it's illegal for this to even happen, you can be like, well, I could give you $20, but like I'm not paying the full 60.
And then
Because
it-
you're
and
not
then
even
the
allowed to
debt will
get
go
money
away.
from me, and it could, yeah, they can.
Well, it'll
change
still
it.
be on your credit report. Eventually, credit falls off. So, like for example, a later missed payment for credit will stay on your credit report for 7 years. Yeah,
Well, I've never missed a credit payment.
Nah.
that's actually the biggest
Happens.
portion of the FICO credit score. If you look at the FICO credit score and the model of how it's calculated, 35% is payment history. That's why I tell the athletes you have to make your payments on time because it's going to hurt you the most.
Right.
The second largest category of the FICO credit score is the credit utilization. So when you go to get approved for a line of credit, you are approved for a certain amount. So a house loan, a car loan, a credit card. You have a limit, right? If you are using all of that limit, the credit bureaus look at that as, oh, you're a risk, right? But if you've been approved for a $1,000 credit card limit, but you are consistently using less of that credit, then they're like, okay, maybe we can trust you. So the rule of thumb is to spend less than 30% of your limit on your credit card every month. So if you have a $1,000 limit, you would never want to charge more than $300 on that credit card. And then you would, whatever you put on that credit card, you want to pay off in full every month on time.
Right.
So I always tell the athletes too, keep it simple. Just put a tank of gas on it. And then if you put $50 of gas on that credit card every month, you get the bill, you can afford to pay that and you pay it on time. And that way you can build credit without paying interest. I think there's a miss out there when it comes to building credit. They think if I keep a balance or I have to, pay interest on this and let the balance roll over, to build credit, and that's not true. If you pay your credit card off in full every month on time, you will build credit.
I think that's what I did coming into college. All I used my credit card for was gas.
Yeah.
And then I came out of college, my credit score, it was the first time I looked at my FICO credit scores when I came out of college. And it was phenomenal. I had an A for sure.
You did it right.
Yeah.
You kept it simple. That's what I tell students.
So we have FICO. What was the second one? I'm sorry.
Vantage.
Vantage.
And it's calculated a little bit differently, but very similarly. So I always tell students, if your FICO score is going up, then your Vantage score is going up. If your FICO score is going down, your Vantage score is going down.
Because you don't want to check it all the time.
Right. And so like at annualcreditreport.com, where you're supposed to be able to pull your credit annually, you have to pay to get your FICO score. And that's part of why Vantage Score was created, because they are offering that for free. So you can go to Credit Karma and get your Vantage Score any day of the week for free, and it's not going to hurt your credit. Whereas you either have to be using the right financial institution that will provide you your FICO score for free, or you have to pay for the FICO credit score. I forgot to go over the other 3 elements to that FICO score model.
Okay.
So payment history, credit utilization. The third largest category is 15%. It's length of credit history. This is what hurts students the most. When you're young and you're first starting off, you don't have a long length of credit history. It just takes time. So I tell them, if you have a credit card and you close it, it's actually going to shorten your length of credit history, and that's not good. This is one of the reasons why I like credit cards to build credit, not car loans. Because one, if you use the credit card responsibly in the correct way, you don't have to pay interest. With a car loan, you do have to pay interest. And 2, you eventually pay that car off, and now it closes that line of credit. It shortens your length of credit history. So you have less control. Whereas again, with the credit card, you have control of that utilization, spending less than 30%.
So you want to keep that credit card open.
You want to keep it open, and you want to use a little of it every single month and pay it off on time every month. The last 2 categories are both 10%. One is called new credit. So if you go apply for a line of credit, like a car loan or a credit card, that is a hard inquiry, and that will hurt your credit. That's what we were talking about a second ago.
Yeah.
But if you get approved for the credit card or the car loan, then that's a new line of credit. So then it will increase your credit score. And then that's why Dave Ramsey calls it the I Love Debt score, is because you have to take on debt in order to build credit. And then the last category is types of credit. There are different types of credit. So a credit card is what we call revolving debt. It's constantly changing based on your balance. Whereas a car loan, a student loan, a home loan, those are installment loans. You're paying equal amounts until it's paid off. So what they say is you should have at least one of each. Really, they say 3 types. But I will tell you, again, keeping it simple with the students, one credit card will help them build credit. I watched someone go from no credit to excellent credit in a year and a half of using just one secured credit card. That's it. That's all he did.
And just gas.
Yeah, he was just because it was a secured credit card. In case people don't know what secured credit card is, you have to put money down with that bank, and it gives you a limit. So if you put down $500, that's your limit. So it's a very low limit. You cannot spend a lot on it. But yes, consistently using it, he went from no credit to excellent credit in a year and a half.
And a secure credit, so if you're just starting out, that's probably the way to go, so that you don't get get excited and like, oh man, imaginary money.
Well, I got this Amex. There's no limit on
it.
You know what I'm saying?
It is a great way for students or any adult that has poor credit they're trying to rebuild. It's a great way to start building their credit.
So, all right. Vantage, the FICO, Vantage, what's the next one?
I don't teach the other ones.
Oh, they're not just...
They don't make the money coach, Cami.
Well, if they're not
Standard.
important, no.
Okay. No, I mean...
those are the 2 most popular, so those are what I educate students on.
So do you generally see student athletes, like, I don't know, credit scared me. Because I'm like, oh man, I don't want to... When I was younger, it just seemed like imaginary money, and I just didn't really understand, if I can't see it, then how am I able to spend it?
Right.
And so are student athletes kind of taking to this well? I don't know, how do they feel about it?
I think there's some people that are still scared to use credit based on what they've heard from their parents, which is understandable. And if you're scared, it's okay. But that's why I educate on the secured credit card, because it's a safer way to build credit. But I think credit is one of the most popular topics that students want to learn about in college.
Yeah. I mean, you want to buy a house, you want to buy a car without co-signers or anything, and it be just yours. You got to have good credit.
Right.
And that takes time, is a big one, but also you got to have experience and knowing what you're doing to build that credit up. Because they're not just handing out houses and cars to 20-year-olds that don't have credit. That's just not happening.
Yeah. I was just thinking, these guys and girls, they have these huge pools of cash now, though.
Yeah.
What is better, paying for something in cash or using credit?
Depends on the situation.
If you have the cash, is it worth it to build the credit?
So that is a great question. So I always think of using credit as a way to buy assets. So if you're using credit to buy something that's going to go down in value, you wouldn't want to do that, right? So typically, cars go down in value. So a lot of financial experts recommend that you pay cash for something that goes down in value and not pay interest on it, versus a house typically goes up in value, right? They're appreciating assets. So I think a lot of financial experts would say, you can use credit to buy assets. And don't get me wrong, if you can use credit cards responsibly to earn points and rewards, you can do that. Shopping online with a credit card does tend to offer a lot of protection versus, exposing your checking account with the debit card information online. So I will say that you can put things on a credit card that are not appreciating assets when you're online shopping, but just make sure you're paying it off. You're not paying interest on something that immediately goes down in value.
And that, I don't know, shopping online with the credit card sounds like a slippery slope.
I mean, it's possible, but you still have limits to things. I think for me, I like the protection, like what I do personally. I pretty much put everything on the credit card because then I get to monitor it. It counts everything for me. You can go on the app and you can see where you're at for the month. And so am I at that limit? Instead of, I go to my debit card and it does the same thing. If you spend something, I only have so much money left. But this way you're counting up. And so you can see, how much you're spending. And it's kind of like for the mental for me, like, wow, we spent this much this month, like this dollar amount, we need to do better. Or, hey, we got a little more wiggle room, whatever the case may be. Right. And then that protection again for me, like there's just times where cards cybersecurity and all that's really big for a reason. There's hackers, there's different people out there. And the more you're putting your cash out there, the more opportunity it is for that cash to get taken.
Right.
Well, and that I like that as a way to make sure you're monitoring what you're using and protecting yourself, as long as we're not overusing our credit limit, right? Keeping that balance still below 30% of the limit. That's but not everyone can trust themselves, right? They have maybe like to overspend,
the secure credit's good that way.
Yeah.
But can a secure credit card help you buy like a home or something like that?
It can help you build credit and then
to then buy the home.
Right.
Yeah. What about parents? This is kind of a touchy subject here, but parents opening an account, credit card account, and attaching their children to it. Is that recommended? Is that safe? Personally, I'm gonna say no, don't do it. But I'm not a money coach, so because I had to close mine that I had with my parent, and it was on my record for like 7 years, and it gave me a big hit,
right?
Because I didn't want what she was doing to affect what I was doing,
right?
Oh, so then you closed it,
and it hurt my credit for a while because.
And so if you are on your parents and say it worked out, and you liked where you were sitting, can you transfer?
So my son, when he turned 18, I added him as an authorized user on our credit card to help him build credit. So he actually doesn't even have the credit card. He doesn't use it, but he's on our credit card. But a student or young adult would only want to do that if their parents are responsible with credit, right? So if they think that their
parents are the money coach, you're probably
you're okay.
Probably good.
But I am talking to him now about getting his own, and so he could use a different credit card if he wants, or he can call the credit card company that he's on with me and just get his own.
Okay.
Yeah.
And so then if he called the credit card company that y'all are with, got his own credit card, does your score become his score off rip?
Your score is associated with you and your social security number.
Okay.
And so
when you open a credit card, like where do you start, at 0?
No, okay, so this is interesting. A credit score, like the FICO score is 300, 850. You could have no score. Like my daughter probably has no score because she's never taken out any line of credit. It's not a 0, it's not a 1, it's not a 299, it's nothing. And then once you open a credit card, and it takes about 6 months to establish credit, and then now you have a line of credit that you're using, and now you can have a credit score.
Okay.
Yeah.
Interesting.
So right now, your babies do not have credit scores, probably, right? No. What you could do though, you could put credit freezes on their credit, right? For their social security numbers.
Oh, yeah.
You have to contact each bureau, Experian, Equifax, TransUnion, and you have to set up that credit freeze. And that way no one else can take out any line of credit in your child's name. And you can do that for yourself too if you're not interested in opening a line of credit anytime soon. It's free.
Cool. You just call them?
I think you have to do it online through their website.
That's cool. I didn't know that one.
I didn't either. I'm kind of still stuck on cash versus credit.
Okay.
Like what's better to use?
Yeah.
I think the depreciating assets versus appreciating assets is
I totally get
model.
that. Like I would never buy a car or like a chain or something on credit. Like that's crazy.
Okay, so this is the way I would
jewelry?
look at it.
Yeah, like jewelry, like don't some guys do that. Like
there's a lot of guys on the team that got a chain.
Yeah. Oh, my credit limit's 10,000.
What?
Oh man, I could get this Jesus piece.
Hello.
So we just recently booked flights for a vacation for this summer. So I put it on my credit card, but then before the credit card was due, I used the money to pay off that credit card. So essentially, I am using cash, right? But I use the credit card to actually make the transaction. 1, for rewards, and 2, everything you do online. I tend to use my credit card online and not my debit card. There are 2 places where your information can get skimmed. Well, actually 3 places: online, ATMs, and gas pumps. So whatever
with the little chip reader thing, I always
check it.
I tap on it real hard.
Yeah. I do that with
Pull on it.
ATMs and gas. Well, with my gas, I just use my QR code at Walmart, so I don't have to put anything in. But any way you can protect yourself, that's good. So I do all my online transactions with credit card, not debit card.
Okay.
Get that cash back.
Yeah.
Next thing you know, you got 500 cash back.
Could you explain cash back to me?
Yeah, so they typically offer a certain percentage based off what you're purchasing. So they may have a promotion, and different credit cards offer different things, but they may say 5% back on travel, 3% back on groceries, 2% back on gasoline. And so for every dollar that you spend in that category, that's the percentage you will get. And it will be added to your account, and then you get to choose what to do with it. You can either apply it to the balance, or you can let it rack up and then do something with it. It's your choice.
Okay. That was like a way easier explanation than what I thought.
Yeah.
Yeah.
I don't know why. I think I tend to complicate some like finances in my head,
Yeah.
like just like the
It can be
principles of
scary.
finance. Yeah. I
Especially
just don't want to
when
make a
you-
wrong step.
Right.
You're in charge of the house,
Facts. I am in charge of my house.
You gotta do what you gotta do, You
I
gotta-
think a lot of people try to overcomplicate credit, and it's not. Just keep it simple.
Yeah. I feel like that's the main like gist that I got out of this is credit is like pretty simple, like very self-explanatory. It's like all the other like fancy things
human
that you can
error.
do with credit. Yeah.
Like most things in life, it's human error. If
Yeah.
you get to go feeling good because you don't have a limit on that Amex, or you get to feeling good because it's your birthday weekend and
Yeah.
you're trying to go to, I don't know, St. Lucia or something, but you don't have the funds for that, you can be paying on that interest for however long until you can finally accumulate the amount to pay it off. Now, human error. There you go.
Yeah.
You lost the game. It
So-
really is like a game to me.
Yeah.
Yeah.
And you know the rules.
Yeah,
That's
and
the
you got
thing.
the rules.
People get scared when they don't know the rules.
Yeah. That's fair. I mean,
Yeah.
I'm getting educated and I know the rules now. I'm
Right.
gonna start using my credit card online more often.
Hello.
Well, below 30% and
Don't
pay
let
by
Kate,
in full.
right,
Yeah.
don't let Kate watch.
Yeah.
Kate's like,
Oh
we
my
use a
gosh,
credit card
yeah.
a lot? No, I'm playing.
Underneath the 30%
Right.
Yeah.
We're capped.
threshold. Yeah. Gosh.
Perfect.
Make sure Kate don't watch this episode. Oh, we're using the credit card online now. Okay.
Yeah, wow.
I'm gonna get home and be in
Got
super
7
debt.
Amazon boxes
Yeah,
pulling
oh
up
my
this week.
gosh.
Well, I think that we've got some great education on credit now. You feel better?
I feel way better.
I learned
Yeah.
something today as well.
Good.
Definitely.
Thank you so much for coming on this show.
You're welcome.
This has been another amazing time with Money Talks with MidFirst Bank. Money Coach Cami. There it is. Lots of money in there. Lots of MidFirst. We love it. And Boomer Sooner.
Boomer sooner.
There
Yeah.
Boomer sooner.